Hi, I'm Steve Booren. Welcome to this week's edition of Prosperion. A common question we receive at Prosperion is, where are all the tax-advantaged investments? Well, last week, John Booren covered two simple ways to reduce taxes on income. But certain types of investments also have the potential for tax benefits. Specifically, there are two underappreciated and often overlooked investment strategies that I'd like to discuss today: municipal bonds and dividends from common stocks. First, municipal bonds. They can provide a steady tax-free income for investors that's especially attractive for those in a high tax bracket or those with a low risk tolerance. The interest payments from a municipal bond are tax-free to the investor for federal tax purposes and in many cases state income taxes. Tax-free bonds are essentially a loan between a municipality and an investor. The interest is paid on a semi-annual basis. That income can be completely tax-free. Currently, the rate of interest on tax-free bonds is actually higher than that of comparable U.S. Treasury bonds, according to LPL. Simply put, right now, an investment in a tax-free municipal bond offers a higher income than a similar taxable U.S. Treasury bond. Remember, however, municipal bonds can carry more risk than a typical U.S. Treasury bond. Well, a second area, or a second often overlooked tax-advantaged investment, is in dividend-paying common stocks. For those in the high top tax bracket, stocks that pay qualified dividends actually have a tax rate on that dividend roughly half that of other incomes, such as earnings, rents, royalties, and interest payments. Now think about that for a moment. The taxes on dividend income is actually half of what it would be compared with other types of income. The top tax bracket on dividends is 20% compared to 39.6% on other income. Though companies may not be able to pay a dividend or may elect to discontinue that dividend, many actually increase those dividends over time, which can lead to capital appreciation over a long investment time frame. We believe that it's essential to have rising income during retirement. And frankly, I believe that dividends are one of the few areas where investors can seek rising income and spending less of that income on taxes. Though no strategy can promise to a profit or provide tax benefits, we're big believers in this concept. That's why we created our growth of dividend strategy to seek after those benefits. As tax season wraps up, consider your investment strategy and be intentional about it. Depending upon your situation, tax-advantaged investments like municipal bonds and qualified dividend stocks could be a smart move to lower your tax bill, thereby keeping more money in your pocket. I mean, after all, checks are good, bigger checks are better. If you have any questions about tax-advantaged investments or would like to discuss implementing our growth of dividend strategy in your portfolio, please let us know. Thank you for being a client of Prosperion Financial Advisors. I'm Steve Booren, and thank you for joining us today.